but I'm going to say instead that we are thrilled to bring this WWE live programming to our members around the world. WWE Raw is sports entertainment, which is right in the sweet spot of our sports business, which is the drama of sport. Think of this as 52 weeks of live programming every week, every year. It feeds our desire to expand our live event programming. But most importantly, fans love it. For decades, the WWE has, grown this multi-generational fan base that we believe we could serve and we can grow. We believe the WWE has been historically under-distributed outside of North America, and this is a global deal, so we can help them and they can help us build that fandom around the world. I should add that this should also add some fuel to our new and growing ad business. We're very excited about this deal. Expanding into live event programming is something we've talked about for quite a while, and this has been in the works. So you should look at this as fits inside of our $17 billion programming spend now.
But I think it's critical to understand that that engine works on top of, and we see it working on top of, very healthy organic growth. You can see it in things like better than forecasted churn. We see better than expected impact from the recent price changes we did. And that's the model, essentially, right? If we can continue to improve our core offering, that means more diversity and more quality from our members' perspective and our films and series. Now adding the live events programming to add even more value, continuing to grow games and the entertainment value that we're delivering through those. Then our paid sharing work and our ads work creates a more effective engine to translate all that value into revenue growth and will support increased conversion of our addressable market in many years to come. Yeah, our top ads priority, you've heard us say it before, I think you'll hear us say it again, is scale. We saw 70% quarter-over-quarter growth last quarter. That's after 70% quarter-over-quarter for the quarter before, and then 100% the quarter before that. So that's a good trajectory to be on. We're now at 23 million MAUs, and we see that continuing to grow in the quarters ahead. And I would say we got a ton of work ahead of us on just getting to the level of maturity and impact to the business from the countries that we're operating in today. I would say, never say never on expanding beyond that, but it's worth noting that the countries that we are currently operating in represent about 80% of global ad spend. So we're already, working in the spaces where there's the majority of opportunity.
We've got a rich history of helping break some of TV's biggest hits like Breaking Bad and Walking Dead, or even more recently with Schitt's Creek. Because of our recommendation and our reach, we can resurrect a show like Suits and turn it into a big pop culture moment. I think you have to remember the studios have always been in the business of selling their content to others, including direct competitors, for years. I believe because, again, of our distribution heft and our recommendation system, that sometimes we can uniquely add more value to the studio's IP than they can.
Yeah, well, we're stoked by the performance of GTA. We had high hopes, but it exceeded even those high hopes. So it's a great place to be. So the biggest download and engagement numbers that we've seen so far, we were in the top mobile game downloads for several weeks, which shows it was not only big for us, but big numbers for mobile gaming in general. And beyond any specific title, we've tripled game engagement over the last year. So that's a solid growth trajectory for us. We've clearly seen, one of the things that we've learned is that recognizable games, that's either existing popular game titles or game franchises, or games that are based on well-known IP. And in many cases, that's IP from our own films and series. Those are the ones that are working the best for us right now. Yeah, as we had talked about previously, we largely put price increases on hold while we were rolling out the paid sharing work because we saw that as a form of substitute price increase. Now that we're through that, we're able to resume our sort of standard approach towards price increases. You've seen us do that in the US, UK, and France. Those changes went well, better than we forecasted. And we will continue to then monitor other countries and try and assess, when we've delivered enough additional entertainment value. We look at engagement, retention, acquisition as the signals there, so that we can go back to members and ask them to pay a bit more to keep that positive flywheel going. We did consider making it the default option, but given our long history of not having ads, we thought it was better for our members, rather than force them into a change and give them ads, but better to attract them to the ads plan for the ones that wanted it based on the benefits: more streams, higher resolution downloads, and of course the lower price to be able to access all these incredible stories.
In the areas of business that are in our core, movies, television, and now games, the that business, we're capturing about 5% of consumer spending. In our most mature markets, we're getting about 10% of TV time. So in our very core business, we still have an enormous room to grow.
You can expect that we'll continue to return excess cash to shareholders through the buyback. We don't try to time the kind of stock price. So, we really are kind of more in I would call it more of a price averaging sort of approach, and that we buy back over time as we have excess cash.
We want to improve our entertainment offering. To do that, that means delivering more stories that our members love, films, series, games, now live events. That's the key to that success. And then on top of that, we're focusing on improving how we translate all that additional entertainment value into revenue and improved operating margin. That means growing our ads business. It means growing, general plans and pricing optimization. That's the major area of work there. So that's what we're going to be focused on for 2024, and we're super excited to do it.